All right, looking at the Nasdaq futures chart on a 4 hour, I've changed it into a line drawing just to declutter some of the candles. I want to look at the pattern here. So if we look within the box, we have a left shoulder that's developed. We have the head down in the previous buy zone, just below 15,700. And then we have this break up to start forming the right shoulder. We do note that we have an untested previous resistance here. We had price break through the 16,000 area, and it's yet to retest on the right side from the break. The retest into the previous resistance is somewhere around 16,000. We also have the 61.8 of the bounce down here acting as support too at 15,881. And we can also note that the left shoulder and the right shoulder are somewhat similar in nature. If we go ahead and draw a horizontal line, we see the left shoulder, this entire pattern is a left, a head, and a right, and then a fail and a breakdown to create this longer term patterns head that we tested down here. And then again, we see that same level play on the right side where price came down into this level and tested it to form a left shoulder on the entire right side. And now we are waiting for a test down here into the previous support, which will be just about down into the level that the head was on the left shoulder, the complete left shoulder side. So we're looking for a test down here into this general area, which is also a previous uptrend that we broke down at the head and have reestablished. And when we get that, we'll look for a shift back higher to complete this right shoulder. And that will complete the entire pattern with the left, the head, and then the right. Now this establishes a neckline, which is the top of the pattern at this previous high that we'll call 16,400. So this is our resistance. This is our assumed entry if internals agree, if the market pressures agree. And then we assume more congestion to complete the pattern. Now, how much congestion? Generally, we say the left and right should be equal in time. And so if we assume the previous side was 40 days, well, we're not assuming the previous side is 40 days. The other side was 40 days. And we can go ahead and chart our 40 days here. Back to here, which is 15 December. And so we would assume that this pattern, if it's to break out, should break out somewhere around 15 December, which is this Friday. Now we know, or sorry, that's this Wednesday, which is we know is FOMC. So we will have to watch for action out of that event. And then we also have options expiry on this or on the 17th of December, which is this Friday. And so coming out of these events, we generally see volatility increase, either up or down. So this may be a good time to watch for this pattern to break. As far as the target for this pattern, the math for an inverse head and shoulders is calculated by taking the neckline that we called 16,416 and subtracting it from the low of the, or where the head was set, which is 15,538. That gives us 878 points, and then we multiply it by 74%, which gives us a breakout value of around 650 points. And so when we add 650 points to our shoulder line, or our neckline, we end up with a target around 17,066. Now, it doesn't mean that all these other lines above it go away. but it does mean that that is the price that we would see, or we should see, coming out if we do get that break. Um, we can also note that the current cycle high and target the 161.8 if we do break above the previous high at 16,767 is up here near 17,500. So this plots out a future directional path for the Nasdaq, assuming that this inverse head and shoulder pattern plays out. We do know that volume is constrictive in nature, and so we expect for the next few days to kind of just be congestive. But once we do see the break, if we do see a break over 14,416, we would look for the break to establish up, test into the previous high, and then most likely back test and then break up and out to final target of the inverse head and shoulders at 17,050, and then further up into the 17,500 range. If we do see price break below 16,000 and fail to reestablish above it, then we start to question the validity of the pattern. Because the 61.8 of the move from the low to the high is at 15,881, this would function as the stop for any long position. We also note that when price on the left side broke lower, it also came into this area as well of the 15,880 area. So the question really is how to play it, and I guess that is on everyone's own volition. Personally, I have already constructed a position here in the middle, and so if we do come down here into 16,000 and we see internals improving and buying increasing, then I'll probably either get directional for the breakup and out, or you could also position into like a call vertical for the move higher. But just a few ideas. I just wanted to really cover the inverse head and shoulder here on the chart. If anybody has any questions, just let me know. Thanks.